First off, we know that ICT likes to talk about how price will aim at fair value gaps. So these are imbalances in the market where price, does not trade completely back into, and so it creates essentially a gap, right? So I like to use this little box, rectangular box for myself to kind of notify myself of those gaps. And you can see price tried to trade close to that gap. Now, you're not going to know which fair value gaps are, there's no secret method to know which ones price is going to trade to, but you know that price likes to use them to target, right? So you could say that after price traded down here, this high, this high, this high, all becomes buy-side liquidity, right? A point at which a seller had put their stop at one point in a place that price might want to go back up to, right? Overall, it's easy to tell that we're in a downtrend using the fair value gaps, right? So if we're looking at the overall chart, you can see that what ICT likes to talk about is how when imbalances are left open, like for instance here, when imbalances are left open, that means that price has an affinity to trade in that continued direction, right? So price earlier in April traded way past the sell side liquidity, right? But it never traded back into it. So that will signal to you that the overall bearish mood of the market is still going to continue, right? So we take that and you can understand that as long as price doesn't trade back through this fair value gap, this imbalance, I know that I can stay with my bearish or my sell side bias, right? So that's one way that I use bias, using the fair value gaps to help explain to me which direction I should be looking for trades, right? So when I come over here where I showed you all before, when I was, let's see here. So I showed you all before that price had come back above liquidity, buy side liquidity. We can now, using that concept, don't mind these are just lines that I use to notify myself of buy side liquidity, right? But if you look over to the left, what's that? A fair value gap, an imbalance that price moved up into, but what it did not do, it didn't move past it. So at that point, as price now begins to trade lower, we can take all these extra things off the chart, and we can try to identify an area, a breaker, an area where price after trading above never traded back up, after trading an area where after trading below it, price never traded back above, right? So we see that as this area, these two down close candles become a breaker. Now a breaker, ICT talks about, and this is kind of bonus, I guess, because I didn't say I was going to mention this, but it's a high, a low, and a higher high. Now this is, I'm able to tell you all this because this is stuff he shared online, right? So I can say it, not breaching my NDA or whatever. This is a breaker, right? So for myself, I would tabulate that here, right? By telling myself, okay, these two down close candles are the breaker. It's a high, a low, and a higher high. Price comes in, ICT talks about when price trades past the breaker with an impulsive move and creates a fair value gap. That's how you would know that this is a level that when it trades back into, you want to watch to see if it's going to pass it or not. You see price comes up, doesn't want to pass it, and so you kind of are validated with this breaker, and then you can begin to look for sell side trades, right?